what's going on, everyone? Christian Carter with Radius Financial Group. Hope you're having a great day. And today we are talking about downsizing your home. So more specifically, going from a large, expensive home, and just selling that and moving into a smaller, more less expensive home. We're gonna discuss how this affects you from a mortgage standpoint or from a financial standpoint, and some of the benefits that go along with that, right? All right, so first of all, lowering your monthly payment. This is an obvious one, right? When you go from a big house to a small house, you're obviously going to lower your monthly payment. We're going to go into an example here, and we're going to show you how that actually works and how effective that can be. So, all right, so you're using the proceeds from the sale of your current home and applying that cash as a down payment to your next home, right? So let's go over a quick example. You bought a home in 2010 for $500,000. Took out a 30-year fixed rate at a 5% interest rate. That means your mortgage payment, just your principal and interest, is coming out to $2,684, right? So you got a mortgage payment of $2,684. In 2020, 10 years later, you sold that home for $600,000, right? Now in 2020, your mortgage balance was $400,000 because you paid off roughly $100,000 of that mortgage in that 10-year period. I think it's really like $94,000, but whatever. Let's use simple numbers. You paid off $100,000, right? So you sold the home. You sell the home for $600,000. You got a mortgage balance of $400,000. You now have $200,000 to apply to your next home, right? So you buy a new home in 2020 for $400,000. You apply the $200,000 from the sale of your old home, and that means your new mortgage balance is $200,000. Again, 30-year fixed rate at 5%. That lowers your mortgage payment to $1,073. So you go from a mortgage payment of $2,684 down to $1,073. That's a monthly savings of $1,611. That's a lot of money. Now, we'll give you another example as well. Everything stays the same. Bought a home in 2010, sold the home in 2020 for $100,000 more than you paid for it. Used the sale of the proceeds to apply to the next mortgage. But this time, instead of taking out a 30-year, you're going to take out a 10-year at 5%, right? So you're going to pay this new home off in 10 years. Your mortgage payment comes to $2,121. That is still lower than the mortgage that you took out in 2010, and you pay off your house 10 years earlier. So this just shows you the power of the financial power of downsizing when we're talking about going from a big expensive home down to a small home. So next couple examples are going to go really quick, so stick with me, please. Less expensive real estate taxes. This is also a pretty big one. So let's use an annual tax rate of 1%, right? I think the average in Massachusetts is like 1.1, but these rates are set by individual towns and municipalities. Enough of that. You have a home worth $600,000, right? So your annual tax rate is going to be about $6,000 per year in taxes. When you buy this new smaller home in 2020 for $400,000, your tax rate is going to be $4,000 if we're using that annual tax rate of 1%. So from a real estate tax perspective, when you move from a big expensive house down to a cheaper house, you're going to be saving money, a good chunk of money as well. In this example, you're saving about $2,000, $2,000 per year. All right. Also, less expensive homeowners insurance. There's many factors that go into home insurance, but from a 10,000-foot view, if you are moving from a big expensive home down to a cheaper home, you're definitely going to be saving money per month and per year on your home insurance. All right. Now let's go over to the next point: lowering your household expenses. So got a couple examples here. Again, we're going to kind of fly through these because they're pretty simple, pretty easy to understand. A lot of times when people are downsizing, they go from a single family home to a condo, right? And I know what you're saying, like, oh, there's a condo fee and things like that, which is 100% accurate. But when you move into a condo and you've got that condo fee or the homeowners association due, it allows you to budget your money much better, right? So you're not gonna have to save up for that new roof, new water heater. You're not, lawn care maintenance. Up here in New England, snows a lot, so snow removal. Those kind of variable expenses where you don't know what kind of winter we're going to have, what kind of appliances are going to break down. that condo fee or that HOA due, it allows you to manage your money better moving forward, because it turns that into a fixed expense. So that's a quick example. Yep, condo fee makes it easier to budget. And then this is just another great point. A smaller home means smaller bills. So from this standpoint, we're talking about lower heating bills, lower air conditioning bills, lower electric bills, and then also lower overall maintenance. If you have a big 3,000 square foot home and you move into a 1,500 or 1,000 square foot home, just there's less stuff to heat, then there's less stuff to break. And when things do break, let's say there's a water leak and it damages your hardwood floors. You're ripping up 1,000 square feet of hardwood floors as opposed to 3,000. So just little things like that can really help you out. I hope this was helpful. If you have any questions, please feel free to reach out to me anytime. Anything mortgage related or downsizing related. Thanks.